Happy Friday, traders. It's 8:01 a.m. Chicago time on Friday, the 8th of January, 2021. This is non-farm payroll day and episode number 1913. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. How has your first week of trading in 2021 been? It certainly has been a runner this whole week, pushing new all-time highs, including last night in the S&Ps and the Russell. Overall, how's this week been? Are you tracking your performance? Have you set goals for this week, this month, this year, and so on and so forth? That's the kind of work it takes to stay focused and stay disciplined and selective with our trades. Let's dig right into the convergent pre-market summary sheet. Oh, the cat's got something to say. Allocation again is to risk on sentiment. Oh, the cat's not liking these new all-time highs. Oh my gosh. Hang on one second. Cat's got something to say. Sorry about that. Had to kind of shoo off the cat there screaming. All right, so sorry, she goes nuts every time I start talking in the morning. So risk on allocation this morning with the COVID situation. The NFP miss was a big one this morning, and the market sold off a little bit, but has come back to where it started from before the number, which was about a half hour ago. The Democrats, having swept Congress as well as the White House, now have the ability to implement the U.S. stimulus plan that they have been talking about all along. We'll see if the words are followed by actions. As you all know, I don't have any allegiance to any particular party or politician. I'm equally critical of all of them, as we all should be. So the market's anticipating a Democratic package now that control rests with Democrats as of January 20th, when President-elect Biden takes over. The expectation is that they would pass a bigger stimulus package, and some of that's being factored in into what's going on here. And you can see gold down $30 today, 1.62, and silver down 2.79%. That's part of that is this anticipation of a stimulus package. Also, EU earnings in line on deck right now, and moving the markets around. The DAX is up 0.47%. The Euro stock's up 0.3%. But overall, relatively okayish to muted overnight session. Currently 204,000 contracts, in line with normal expectations, and 25 points of range, which is relatively light when looking at the prior sessions. Let's dig right into our review segment. Yesterday, the primary scenario is a choppy sideways trade on the open. Pretty choppy sideways trade. A breach of the OS high on an extended rotation, looking to take out the double top at 74.75, 37.74.75 that was left behind yesterday, is outlined here, and expecting it to make a run towards 3,800, expecting really 95 to be the key target above, giving us a reasonable exit for a long on the closing band. There's nothing up here in terms of existing history or an existing auction. So from here, it's all about projecting measured moves and projected volatility sigmas for the close. So That's where we stand. The downside was expected to push to 30.75, and of course that didn't happen. Here's what yesterday looked like. This is a 4-tick Renko, and we get this sideways move as expected, and then a break, an impulse higher, pushes right into 94. So already we're at that key target at 95, consolidates, pushes through 3,800, the century figure, pokes, and then sits sideways. Yesterday, what a profile. Look at this profile, just very strong kurtosis there near the highs. What does this say when the market is holding VWAP, 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 all these tests of VWAP, and is staying up against up against the upper end of the range on high kurtosis? Just as a reminder, kurtosis, a quick statistics kind of lesson here. A normal distribution looks like this with normal kurtosis. The first sigma is there, second sigma is there, and third sigma is there, something like that. This is what we would consider normal or 1 sigma, okay? And this is kind of a normal distribution. High kurtosis looks a lot like this. Let me change the color. Let's see. Oh, don't like that color. Let's do this. High kurtosis is when you have the data concentrated, very concentrated, and then so now the first sigma gets really tight, the value area gets really tight, and what ends up happening in terms of market profile is that the higher the kurtosis, the more the energy. Think of it as a high pressure or compression. This is what high kurtosis is. The expectation is a continuation. Look at the structure here. We've moved up. We did not even test yesterday's point of control. We didn't test any of yesterday's real range. And all we did is hold the upper end of the distribution, take out that 74, 75, double top, clear double top on the half-hour chart, and we pushed and stayed above mid and above VWAP with a high kurtosis. This is very likely to continue higher, and that's what we did. We pushed a high to 38, almost 38.18 overnight. This is a pretty high probability play that it's likely to continue. I mean, what it's doing is it's getting higher prices and it's holding on to those higher prices. It's not backing off. So that was yesterday, a P-shaped kind of profile, squeezing shorts yesterday as indicated in the Head Trader channel on Convergent Trading repeatedly. There's just no reason to get short. The shorts are a low probability, and it makes no sense to get short. Note, by the way, again, something to be cautious of course, is the fact that price keeps pushing higher from the open. The open was down here. Price keeps pushing higher, and then but the delta, which started off pushing higher, ended up pushing getting lower. Delta divergences are, in my opinion, on a long-term basis, are an indication of the kind of participation that occurred within that day. But again, it's a weak indication on its own. It's really not very meaningful because you can go on and on and on with the weak delta. We've seen this in the Russell where we end up trending down day after day in delta with the Russell pushing new all-time highs. But it just shows, all it's doing is it's telling us the kind of aggression that's taking place as the market goes higher. In other words, price is being pulled higher. In other words, sellers are pulling and offering higher because they believe they can get better prices, but then hitting the bid on any pullback. So that gives us a negative delta on higher prices. Overnight, here we are, 206,000 contracts, completely normal distribution again. Markets accepting price. We have our point of control and the mid and VWAP for the full session right above yesterday's all-time high, all clustered in the same area which we've been stuck in for hours and hours and hours. Pretty much the entire evening session has been stuck between this 3804 to 3809 kind of range. A strong consolidation here, but what we know and have learned is that price is accepting value to be higher, just like it did yesterday, and so on and so forth. So this is a market that is really taking in the higher prices, and they're okay with it. So again, the shorts are are the weaker play. We left a gap, an internal gap behind yesterday, and we are again right up against yesterday's high. So I'm not going to draw up scenarios today. It is pointless. So I'm going to cut it off right here. I'd like this trader bite to be short. So I'm not going to throw up some scenarios here. It's the same thing as the day before. Consolidation. Again, the overnight imbalance, if you didn't see this on the summary sheet, the overnight imbalance is almost 100% long. So the expectation, you guess it, the expectation is that we are likely to pull back a little bit, and then pull back a little bit, and then continue to drive higher. Okay. Good luck, and I'll catch you on Monday nice and early. Hopefully you had a good week. I'll talk to you soon. Take care.